Hello, I'm Dan Passarelli of MarketTaker.com down here on the floor of the CME Group. Well, every day we talk about different trade ideas in our Market Taker Live Advantage Group coaching class, as I'm sure you already know. Now, today one of the trades we talked about was in LinkedIn. So take a look at a chart of LinkedIn. You'll see the stock looks pretty oversold, pretty extended to the downside, but on Tuesday, yesterday, the stock had a pretty good bounce, and today that bounce is continuing. Because the stock had a pretty good rout before that, the implied volatility is high and options are still reasonably expensive. This, ladies and gentlemen, is a perfect setup for a put credit spread. So here's the trade that I like. I like selling the April 160, 165 put credit spread. Now, I like this trade because there's support, there's a double bottom down at about $160 a share. We've got that support there. We've got some pretty good momentum on this bounce headed to the upside. I think that that momentum is going to continue, and with the options priced as they are because of the implied volatility, they're expensive enough and ripe to sell, and so it's a really strong put credit spread candidate. Now, I'd manage it a little bit. I think whatever premium I was able to get when I put the trade on, if you have to keep in mind that your maximum profit is that net premium collected. You can't make any more than the premium you collect. So once I could buy it back for about an 80% profit, once I get 80% of my maximum profit out of that trade, I'm going to close the trade and take that risk off the table and move on to the next trade. Now, if the stock ends up falling, there's a little bit of a rout, and it goes against me, I would probably roll it down to the 155, 160 put spread, because 160 is really where the strong support is. This is Dan Passarelli of MarketTaker.com, and please try our Market Taker Live Advantage Group coaching class. Just visit MarketTaker.com/GC.